Okay, this is a quick little thing on security exchanges, and then it's going to lead into our index assignment. I'm not going to do this very often, but this particular situation just allowed or wanted us to, or put us in a situation to do this. Again, these notes are printable. I will put them in there, and if you want to take notes on top of these, like we've done in class, that's fine. You can put them in your iPad, just like we've done in class the first time we took notes, which actually, depending on when you're doing this homework, was within the last day. So anyways, we're going to talk a little about security exchanges as we go into our stock project, and a little bit about the equity markets and how this functions. Really, we're going to talk about the New York Stock Exchange, the NASDAQ exchange, and then some of the ways that we monitor stocks. And some of these you've probably heard of. So again, I'm going to move pretty quickly. Some of this is in your textbook, but a lot of this is some things that we just want to kind of focus on, again, especially as we get ready to start our stock project, the first project we have for the semester. Okay, so here we go. Wall Street is where the stock exchange is located. Again, it got its name because of the blockade built to protect New York from attackers. If any of you guys have been there, then you have seen Wall Street most likely. If you've been to New York, if you've taken the ferry out to see the Statue of Liberty, that kind of thing, this is where that's located. You can see a little bit of a map here. That wide street is actually Wall Street there. The first organized training was in New York. And again, I think many people claim that Wall Street is the financial capital of the world. Now, again, our economy is putting ourselves in kind of weird situations here, but you can get an idea on this as far as whether or not we're the capital of the world. Although whatever happens in America tends to impact the rest of the world, and it starts here in New York or on Wall Street. And again, just another map there on the bottom, a couple pictures of what Wall Street looks like. The New York Stock Exchange is the oldest and largest stock exchange. It was founded in 1817. Basically what happens is you have to buy a seat in which to trade, or with which to trade on the floor of the exchange. You can get an idea here. Again, it does cost money. It's varied over time, certainly not very much, at least the way we look at it. Obviously with inflation adjustments, a huge jump between the 4,000, and that's supposed to be a comma there, sorry about the typo. But ultimately you can see as we go through the years, the costs of memberships have fluctuated rather significantly. And certain historical events have certainly played a role in that. But that gets you up through 1993. Again, my impression is, or my understanding is that it's around $600,000 now for a membership. Again, someone has to leave the exchange for someone to come in. And many of the big brokerage houses and banks have seats on the exchange. Some of these statistics are, again, from the early 90s. Again, there's a picture on the right of the floor, a little, not a great photo, but it gives you an idea. There are roughly 2,800 companies on the exchange. The value of those companies is somewhere in the $20 trillion range. Again, we've been working a lot with trillions of dollars with the country's budget recently, and so that gives you an idea. Here are some requirements, and again, very quickly going through here, the companies must have issued at least the following. They have to have pre-tax earnings making $2.5 million per year. They have to have at least 1.1 million shares with a net asset value of $18 million. That means their shares, if they only have 1.1 out there, would have to be worth around $18 a share. Certainly, as we've talked about, those numbers fluctuate greatly. They have to be owned by at least 1,500 people. They must publish quarterly financial reports. These are things that are sent out to their stockholders every quarter. And then ultimately you can kind of read through again at the bottom there. As of July 2004, all but 2 of the 30 companies in the Dow Jones Industrial Average were listed on the New York Stock Exchange. Intel and Microsoft are the ones that aren't. And again, that's of 2004. I think there's a few more today. Again, just to give you an idea, this is the primary exchange. When you guys go to buy stocks, most of them will be on the New York Stock Exchange. However, there may be a few on the NASDAQ exchange as well. But these are just some general information about the New York Exchange. Trading on the exchange. For the most part, it's done by computer. There are certainly people on the floor, and they handle shares and selling on the floor of the exchange. It can be a pretty crazy industry and business down there. It's fast-paced, but for the most part, computers are handling the exchanges. Now, for most of us, if we were to make an exchange, whether it be through a broker of ours that we've hired, or even if we go online and make a purchase for a stock online via one of those resources, they're going to group those together, they're going to put in our order, and they're going to make the exchange on the floor. Again, pretty fast paced down there. Every buyer and every guy on the floor is trying to find the right time to buy and sell based on the orders that they receive. And it can be pretty crazy down there. So they are really fighting numbers, and depending on the size of the order, an 1/8 of a point change or a 1/10 of a point change can be pretty significant. Most of the exchanges or trades are completed in this designated order turnaround. Again, this is just a reference we refer to these computer exchanges. So a vast majority are done via this designated order turnaround, the computerized system. The rest of the trades, again, are done just by hand between brokers on the floor. There are other ways that we can trade stock. Most of stocks are traded on what's called the OTC, the National Market System. Again, this is over the counter, just like a pharmaceutical, I guess, but in this case, we're talking about stocks. And again, these are going to be companies that potentially are listed on the NASDAQ exchange, what we'll get to here in a second, or potentially they're what we call pink sheet stocks. And again, for what it's worth, in your project, we are not allowed, or I will not allow you to do that. Your stocks must be traded either on New York or NASDAQ. However, there are stocks that don't meet the requirements of either, and so they're traded over the counter. And again, these tend to be smaller companies that are looking for maybe some hit, something that's going to grab them. Your penny stocks certainly fall into this category. Penny stocks are stocks that are worth a penny or less, or maybe a few pennies. A lot of these are companies that are searching for things. Maybe they're mining companies or research companies that are on cutting edge technologies, and if they find something, they're gonna explode potentially, and so they can be good investments. For the most part, though, these stocks never come to any kind of fruition. So a lot of it's just stuff you throw away. Again, for us, you have to be on NASDAQ or New York. NASDAQ. Here's your. This is why we don't say the name. It's easier to say the New York Stock Exchange than to say this, the National Association of Securities Dealers Automated Quotation. Awesome. So this NASDAQ exchange is bigger than the New York Stock Exchange as far as total companies. However, the value, total market value, is not as high. Companies are a little more spread out around the world. Most of the IT companies are in this exchange. So if you were to kind of look through and Google, for example, is in this exchange. And for whatever reason, it's just sort of worked out that way. But it started developing as time grew. And again, this is where a lot of the tech industries, the biotech industries, a lot of those emerging companies are found in the NASDAQ exchange. Largest paper product industry, materials sector exchange at a market value of $31.8 billion. So again, you can kind of get an idea of where the type of companies that are listed. And so for the most part, you got your tech, your IT stuff, you've got your biotech, and then you've got paper. But obviously there's other companies that are listed in that NASDAQ exchange as well. Again, these exchanges are very easy to work in. You can call a broker, you can go online and make trades inside the NASDAQ or the New York Stock Exchange in a pretty simple way. Most of the companies are out there. You can gain information about them via different websites and things that will analyze and give you data based on that. And we'll talk about that when we get to indexes. The NASDAQ exchange, again, is a newer exchange, much more emerging type companies than the New York Stock Exchange, but also, again, located in New York. Okay, so that's where we're going to go to buy and sell stock, is on those exchanges. Again, each day you can look and you're going to get the report on what happened at the total value of the New York Stock Exchange. But what they really do is they take that and put those into what we call indexes. And again, these indexes are ways for us to analyze and look very quickly at sectors of the market so we can determine how things are going. And so, there are several of these. I don't want to, get you on, but the Dow Jones is probably the one that we've heard of. We're going to spend the most time of it in these notes. But the Dow Jones Industrial Average is something that we hear about. And again, this is we'll get into specifics on that. But you hear, what's the Dow today? What happened to the Dow? Is it up? Is it down? Is it over a benchmark? Did it lose money? Did it, those are things you're going to hear on the news every day. It's going to be in the paper every single day. So that's something that's out there. The S&P 500 is a different exchange. It indexes different things. It's S&P stands for Standard and Poor's 500. It's just another index. The Russell 2000, another index. We're actually going to look at that as an example for our assignment that we're going to do. So again, these are market averages. They're designed to tell you how companies trading on the stock market are doing in general. You know, the S&P 500 or the Dow Jones Industrial Average is the 30 biggest companies that are, you know, so they kind of give us an idea of how the top 30 are doing. Usually that's a pretty good idea of how the economy at large is doing. So that's what we look at that one for. So what happens is that very simply, the Dow Jones is the value of 30 large industrial stocks, big companies, are ones blue chips stocks as they're referred to. And again, these are big companies. You know, GM, Goodyear, IBM, Exxon. These are, and they rotate around. You have to maintain this top 30 type category to be selected. But we're analyzing those. Again, it gives us an idea of how the economy is doing at large. Those 30 companies own a great deal of wealth and produce a large number of goods in our country. And so we have to get a feel. So we use this Dow Jones Industrial Average as a way to do it. How did it happen? Well, 1884, Charles Dow made a list of the average closing prices of 11 stocks he thought represented the strength of the economy. So Charles Dow came up with this plan that he would choose some stocks, and again, it just became a way for him to sort of analyze. Again, you know, pretty good idea, so you don't have to look at each individual stock. How's the economy doing in general? And so he started looking at these 11 stocks. Later, he put this list together in the newspaper that he found with Edward Jones. And yes, that's Edward Jones. There's a financial company named after him, as well as the Edward Jones Dome in St. Louis, if you're a football fan. But that newspaper was the Wall Street Journal. Again, probably one of the few newspapers that's still kind of functioning today, by the way. But at any rate, so the Dow Jones, you can see they just used their last two names, Industrial Average, was created and published in the Wall Street Journal. The list was expanded to 30 companies in 1928. It's been updated 20 times. Basically, the price is computed by summing by taking the 30 major industrial companies and dividing a constant called the divisor. The divisor is adjusted periodically in case something creates a distortion, like a stock splits. And basically, a stock split again is, let's say you had 100 shares of a stock and it was selling for $200. Well, you would split the stock, you would make it 200 shares and then sell it for 100. That way you would basically take the same value, you just spread out the shares. The idea there is that if the price is a little bit lower, you may get some more action on the stock and more selling. Again, this part of it's not critical. The part that's important is us being able to measure this item. Here's a list of some of your stocks. And again, these change all the time. And it would be very simple for you, by the way, to type into Google, you know, Dow Jones Industrial Average, and you'll get that list. And this is certainly something you can go onto Wikipedia and look up. But again, you can see some of the companies that have been on this Dow Jones for a long time, and these are the big boys, right? I mean, these are, you know, here's, you know, Disney, Walmart, here's Verizon, you got AT&T up top, companies like, well, Altria, which used to be Philip Morris, you know, 3M, Caterpillar, Chevron, Coke. I mean, these are the people that we know of. You know, I don't think anyone would have a problem, you know, if you said Johnson & Johnson is one of the 30 biggest companies in the United States, or McDonald's. So as far as that goes, by the way, this is this one down here is Merck, M-E-R-C-K. That's not an E. And you've got several companies on here, Merck, Procter & Gamble, that are pharmaceutical companies. Again, they're highly valued companies, and so that's why they're on the list. All right, so that gives you a list of the Dow Jones Industrial Average. The only one that's there from the beginning, General Electric, and probably not going anywhere just because of the sheer number of products they produce. Now, for what it's worth, there are other Dow Jones averages, and again, they're basically taking another sector and analyzing those on the exchange. So Dow Jones measures 30 industrial companies. You could go to the transportation average, and they're going to take airlines, railroads, trucking. How is that industry doing at large? They may go to utilities. You know, 15 gas, electric, and power companies. How are they doing? You got the Dow Jones 65 composite average, just 65 companies. They're just ways for brokers, investors, people to look at sectors of the economy to determine you know, what's going on with those. And so when we refer to the Dow this is what we're talking about, that Dow Jones, that one we just mentioned, the 30. But if you said, oh, I want an idea of transportation, well, what's that look like? I'm thinking about buying, maybe investing in some railroads, I don't know, whatever, or in airplanes or air travel. Well, how do I do that? Well, I could look at that Dow Jones transportation average and get a gauge of how the economy is going in that sector. Here's some other indexes that you could use, and certainly when we get to our assignment, that you could go here. There's certainly the big three are Standard & Poor's, besides Dow, are Standard & Poor's, Russell, and Wilshire. Those companies are all out there as far as organizations that are indexing stocks, and they're all sector based. So you got to look and see, what do these things represent. If I go look at the Russell 2000, what does that mean? What industries, what sectors am I looking at? Is this the information I really need? So that's something that you'll want to do. Okay, so again, real quick idea: New York Stock Exchange, NASDAQ Exchange, over-the-counter stocks, and then where indexes come from. I do want to show you this sheet here a little bit. This is our indexes worksheet. This is your assignment for tonight, besides watching this lecture. And basically what you're going to do is, obviously name and period up there at the top. You're going to go through them, and I've selected 4. The Russell 2000, the Dow Utilities, the Wilshire 5000. You're going to look up these indexes, and you're going to give me just some very basic answers to questions. The first 3 you can look up. And then the fourth question is, I want you to tell me, why would a broker use this index to evaluate the economy or the sectors represented? Again, this is the one I sort of want you to think about a little bit. The patent answer is, well, I'm looking for a stock in that industry or that sector. Okay, thanks, I got it. But tell me a little bit more. What is it about that particular way that they're indexing stocks that really provides a good answer? Again, I want you to kind of think about this at some point when you go to do your choices for buying your stocks for the project. You may want to use some of these indexes to do a little bit of analysis, and again, these are very readily available, so it happens to be very simple. Okay, so let's start with Russell 2000. I pulled it up, and you guys, I went to the just so you know, all I did to get to this page was type Russell 2000 into Google. So it's not a difficult task by any stretch. And this page gives us all kinds of data from Russell Investments, and I happen to be in their 2000 page. You could certainly go, you can see over here on the right, there are several other Russell indexes, okay? But I'm looking at the Russell 2000 index, and a lot of this, you guys, frankly, is real simple, because I think I asked you, and let's just make sure that we got the right question. Yeah, what sectors does this represent? And so, oh my gosh, there's a heading, pretty simple. Okay, so here's the sectors, and this is fine, you guys. You can just tell me the top 5. So you would list these 5: financial services, technology, consumer discretionary, producer durables, and healthcare into that first slot. Again, so that would be your answer to this question. Now, how has the index performed over the past 5 years, 1 year, 1 month? What was the closing price? And I've got on here February 1st, you guys, and I will fix this. This is, again, just the assignment I did for last springs, but I'll put the correct date in there for you, and we'll probably put August 1st in there. But at any rate, very simply, all you got to do is scroll down here a little bit. Here are the dates, and again, year to date, 1 year, 3 year, 5 year, 10 year. This gives you an idea that in the last little bit of time, again, you can see we've been in a little bit of recession, so it's gone, not great returns, 4%, 5%. Look, a year, however, has been pretty good, but in the last few months, not so much. And again, especially with some recent market crashes, that we've had here in the beginning of August of 2011. So those are out there for you. Okay. 2 examples of corporations in the index. So we can go back in here and we can look at, okay, well, here's some top 10 holdings. So certainly an opportunity to look at some of these organizations that are in there. Here's some of the better performers in there. So these are the kind of corporations we're looking for. So you can put these as your answers to that particular question. And then this is the question: why would a broker use this index to evaluate the economy or the sector represented? Well, this is the one I want you to think about. What is it about this index? What is it about these corporations and the Russell 2000 index that's going to allow a broker to use it to their advantage? Okay, and so you're going to want to look at it. And that's going to take a little bit more of you looking through here and just kind of getting a gauge on what it's about, the characteristics. You can read a little bit about how it's done and how it's handled, how they look at the returns, and some things that are important in regards to, do they use small caps, large caps. That's going to take a little bit more reading through here as opposed to the questions that are answered. But you can scroll through and find out some information, and there's a lot of information over here on the left side as well. So those are the kind of things you're looking at, and then you're going to tell me why a broker would use that. And then finally, I think the last question just asks you, what website did you use? And again, all you would have to do is literally just cut and paste this right here into your sheet, and then you can turn that in. Okay? Again, if we go back to the sheet, you're going to do that for 4 total indexes, Russell 2000, Dow Utilities, the Wilshire 5000, and then the last one, you get to select one. Again, you can go to my list, you could type in indexes, you could ask a friend, family member, whatever, and you're going to do basically the same questions over and over and over. Biggest thing is, you guys, this question: why would a broker use this index? That's what I'm looking for. Okay? Again, there you go. Real somewhat brief, hopefully, lecture there, and then also an introduction to this indexes assignment. The due date and such is embedded in our in your calendar there. Okay? Thanks a lot. Bye.